Hey traders, welcome back to another Sunday video where we talk trading setups for the week ahead. And speaking of, Tuesday we have CPI. So mark your calendars, that will likely be a pretty market moving day. Whether you're trading currency pairs, gold, indices, whatever you're trading, CPI will likely rock the markets as everyone is wanting to know what the latest inflation figure is likely or is actually coming out to be. I am still long S&P 500. I've got both my positions, VOO, by the way, and S&P. They're both the same thing. They're just ETFs that track the S&P 500. So you can see this is my other position, VOO and SPY, which I got at the very beginning of November. Now, I just want to clarify something. People might look at that and say, well, Nick, you must be a really long-term swing trader. And the answer is I actually am really not usually that long-term. It's just that this trade has been going on and I have trailed my stop. If you're familiar with my style, I like to trail stop behind market structure. And every time market structure has formed, it's rallied from there. Right? So you can see there's been many times where I have actually trailed a stop off of the 4-hour chart and it just kept going and going and going. And just to plug the VIP group, I did share all of this trade inside of the group for members. If you're not already in there, there's going to be a promo code and link down below in the description. We have traders from all over the world discussing trading setups, ideas, and of course, we also share our trades in detail. So this S&P trade has been recorded from the very beginning inside of the group. Now, let me also point out and be transparent about this. I also share losing trades as well. I actually had a silver position this past week that did not go well. I entered into the market at what I thought was a key support level. Price broke through it and completely fell apart. This week I'm watching gold and silver as possible new trades to add to the account. So I'll be watching that closely and share any updates within the VIP group. Again, if you would like to join the VIP group, there is a link and promo code down below in the description for YouTube subscribers to get an extra discount off of the membership. Okay, so game plan for this week with CPI around the corner. I want to talk a little bit about this S&P position. Again, key idea here is if price breaks support, I'm out of there, right? I'm going to trail my stop and take profits. But if it breaks and continues higher, which it does look like it wants to do, it's very close to the upper limits of this range, then my goal will be to watch for a breakout, watch for a higher low, and I'll trail a stop even tighter on this position. So that's the S&P update for those of you guys who are trading that one alongside me. I know a lot of members are watching that as well. Let's get on to the big story here right now, which is gold. Now, last week was absolutely crazy on gold. We saw price open up on Sunday and trade to a new all-time high, smashing all the way through to 2150, just barely missed 2150, at least on OANDA's exchange. And you can see price just completely got hammered back down all week long. Now, let me be still transparent. I also tried to buy the gold market over here, and that totally did not work. You can see I tried to catch that support level off of the 4-hour chart. It looked decent at the time, and of course, hindsight 2020, I got smoked on that one. I took a small loss. But anyways, we now are entering into an area where I'm curious to watch how price reacts. I liked the way that this trend line was holding structure so well off the daily chart, and the fact that it kind of broke that on Friday has me a little skeptical on trying to just jump into a gold long. But I do acknowledge that we're at a round number play. 2,000 looks really, really strong, and I'd like to see if it can hold support looking left. So in terms of a bias for this week, I want to take a look at the Edge Finder and see what is going on with gold. And you can see gold actually no longer has that bullish reading that we had last week. So I don't really think I'm going to just jump into a gold long. Now I'm watching for it, but one thing that's sketchy is we'll have to take a look at the commitment of traders data together. But that one is keeping me a little bit on the sideline. COT data was not particularly favorable, I guess, for gold this week. And so let me see if I can show you this in more detail. So we'll go over to COT data. And there is something worth mentioning here for sure. So the COT net positioning, this is their overall holdings, the non-commercials from institutional levels. So what we can see here is that clearly gold is still a favorite overall, US dollar, etc. On the weak side, we have Swiss franc, Japanese yen, CAD, Aussie, Kiwi. But let me point something out to you guys. I make this point often, but net positioning is a very long-term and slow indicator. this might be a great bullish signal for gold. And actually, it's been at this same like spot on the non-commercial net positioning. It's been in this same area. It's been on the right side of this screen for like a year and a half. Now, that's been a wonderful long-term signal. But if you're more of a trader like most of us are, this second table, this is where you want to be. The money flow table here will show you week to week what the latest money moves from institutional money were. That is so much more valuable because, again, it's a more shorter term signal than something super long term like their just general net positioning. So what I want to point out is that gold did see a slight increase. SPX saw an increase. Silver, CAD, Euro, the Nikkei, the dollar saw actually increase. Kiwi, Aussie, pound, and look at the Dow. Dow had a 18% shift in the bullish direction. That is massive. And again, that kind of gives me a little bit more confirmation about staying bullish indices for time being, right? But again, that is a pretty strong signal there. So when we go back to the top setups page, again, these are the things that generally speaking, I'm going to be more bullish on. So I like still the NASDAQ, I like the Dow, and the S&P 500 is getting a +4, but with these other two, they're all three are cousins. With them getting bullish readings, I'm going to stay bullish S&P as well for the time being. We can flip it around here, and let's see what we got here on the sell side. Oil, the Aussie Kiwi, Euro Pound, and US 10-year kind of on the limits there. Okay, so when we come back to the chart, and by the way, I should just mention, if you do want access to the Edge Finder, you can also get that down below in the description for a significant subscriber discount if you use that code YTVIP. So whether you want to join Discord or get the Edge Finder, both are available on discounted prices down below in the description. Okay, so let's get back to the charts here a little bit and talk about some of these things. So if you're watching gold, what I want to point out is going into this week, if we break this level, I think sellers are going to take another turn. And, here's the thing that is kind of concerning to me. If you point this out on a longer term chart, we are still sitting at what is a very long-term level of resistance, right? Price totally rejected this. And I was kind of optimistic in thinking that perhaps with all of the changes in fundamentals that we would see price action closure above this level, but we didn't get it. And so what I'm watching for is, a couple scenarios. I am still willing to buy a pullback on gold at some point if we see market structure kind of come around. Take a look at the 4-hour chart, for example. Like, we've seen this thing completely fall apart off of its upward structure. So I have no interest in jumping to conclusions about, oh, it's time to buy gold. Because, if you get trend lines out here, you can see, direction really has shifted in just one single week. So for me, if I'm watching gold, I'm staying cautious. Let's take a look at the dollar index, by the way. Take a look at the daily chart. And again, this is part of the reason why I do also lean towards gold bullish is I think that the dollar looks kind of weak up here. We're retesting key resistance, and even though NFP was hotter than expected on Friday, it wasn't able to break through resistance. So to me, that signals, hey, market still is kind of looking towards CPI as the major catalyst. Inflation statistics, I guess, are trumping the idea of what jobs numbers are telling us. And at the same time, you have price action still favorable to the downside. In my opinion, this is more of a sell than a buy. As always with that sort of thing, this is not financial advice. I'm sharing my personal opinions. I will be looking, however, for mostly dollar bearish setups. Speaking of which, we can take a look if there's anything on the list here. And you can't really see any USD setups just now on the Edge Finder. We'll take a look on the other side. Again, there's not really any strong dollar currency pairs that I would really look at, but we'll take a look at the major ones just to watch. Euro dollar kind of lost its upward momentum steam. However, we're still sitting at support. So what I'd be looking for, here's the daily. If we drop down to the 4-hour on the 4-hour chart here on the euro dollar, what I'd be looking for would probably be some breaks. So I'm not really interested in selling this at this time because I just mentioned I am dollar bearish. What I'd be looking for is breakouts, retest opportunities, and for the Edge Finder to give me that confirmation that we are kind of indeed bullish. So you take a look, Euro USD, where is it on this list? Here's Euro dollar. It's getting a neutral reading right now. So if we get something that shifts more bullish, then perhaps we get a reading. But for now, not really going to have a big bias on euro dollar, pound dollar. Let's see how this one's going. +2, so really still neutral. If this thing starts to trend up, we may get some extra score. The Edge Finder does account for trend, right? So if right now it's saying pound USD is in a daily chart downtrend, that is, something to consider. So I would like to see this thing resume an upward trend, right? Pick up that steam, and then perhaps the Edge Finder gives us a bullish reading and I can look for a long setup. So again, we've got euro dollar, pound dollar, gold checked out. Let's talk about one of the big ones out there, which is dollar yen. Dollar yen had an absolutely insane week after basically the governor of Japan, I think it's OANDA, I hope I said that correct, he pointed out that the Bank of Japan is considering at some point even getting into the positive interest rate territory. This is meanwhile, over in the Western world, we're all talking about rate cuts. They're talking about potentially hiking up their rates. So of course, that's going to strengthen the Japanese yen, which is what we saw last week. Frank and I, we discussed this on the stream at length. Frank is my trading colleague. We've been trading together for a number of years, and he's also sharing his stuff in the Discord. As I mentioned, you can see all of my trades. You can also see Frank's trades and Ivan's trades. These guys, we've been trading alongside each other for quite some time. So the yen strengthened last week, and Frank and I were kind of pointing to the idea that this could perhaps be the start of a bigger trend in the opposite direction. We've seen the dollar yen be so strong for so long to the upside, and now you're starting to see what seems to be a Fed that's done and a Bank of Japan that is ready to actually potentially start rate hiking. So all of that said, I think that the narrative shift is kind of switching more to a bearish dollar yen. So I think it's kind of interesting. I mean, this is also alongside one chart that we mention very frequently is the 2-year yield alongside the dollar yen. They typically move in a similar direction. And yields are an interesting story right now. You have yields falling, which is, by the way, one of the drivers for why the S&P, the NASDAQ, etc., why they're flying so high is because yields are falling. Now, what do those two things have to do with each other? A lot. This is basically the Fed's this is essentially a great way to track what the economy or what the markets are expecting from the Federal Reserve. So they're expecting, with all this cooling labor statistics, that rate cuts are going to come down and that rates are going to come down. So the yields market is trading lower in anticipation of that. It's kind of genius, kind of brilliant the way we look at financial markets. It is actually kind of it's an incredible thing if you start looking at how intelligent generally markets actually are. They're trading lower in anticipation for rate cuts, which are priced out to be somewhere in, I believe, like somewhere like May is where rate cuts are expected. And so we're seeing the market adjust appropriately to that. It's quite interesting. Anyways, another market I want to discuss for a possible trade this week is I do like oil on the short side. And we'll see if this actually comes into play. I like it here as a possible retest sell around 73 on US oil, looking for a continuation of this downward trend. If that does occur, if we do get that pullback, what I like about it is I'm also getting a nice confirmation on the Edge Finder. We have US oil getting a -7. COT favors the sell side, it seems. Retail traders are very long. Seasonally, we would expect some weakness in December. Trend to the downside. Economic statistics slowing. That's going to be bearish for oil. Inflation statistics also slowing. Again, bearish for oil and commodities in general. Labor statistics, we have, we had a strong labor market on Friday, at least the report, so that's kind of pushing back on our reading. And finally, interest rates coming down, as I mentioned, also showing economic slowdown, bearish for oil. So I just walked through that on how the Edge Finder computes through its algorithm the bullish and bearish readings. Again, like I said earlier, if you do want a copy of the Edge Finder, there is a link down below in the description. You get a subscriber discount if you made it this far in the video, and I hope that is helpful to you. Again, I'm looking for pullbacks. We can drop it down to the 4-hour chart. I've got this chart marked up as a possible sell. I think my first entry attempt could be at 38.2 or 50% retracement. I'll watch the candlesticks, and if I do take that trade, like I said, I'll share it inside of the Discord group. For those of you who are already in there, it would be put under the commodities trades in this section here. So again, if I take any oil, silver, or gold trades, it goes in here. Indices trades here. FX trades here. So we trade all sorts of things, and all three of us are sharing trade alerts. So between all three of us, you get plenty of ideas throughout the week. I also want to point out something. We do have something here that's kind of interesting. This is my my P&L. I put out a tweet and posts all over about this. I shouldn't say tweet. I guess it's an X post, right? That's the new way of saying it. I put out a post about this as my overall long-term performance. I do show this to try and stay transparent in this industry. I think it's very important to do so, and I don't see very many people sharing their personal, trading results. This is one of my more aggressive accounts that I've been trading publicly since 2020. It is a WeBull account. If you're interested in signing up with WeBull, there will be a link down below in the description for that. But the purpose of showing this is to show you, I went through a really tough drawdown. And I just think it's so important to point out that drawdown is inevitable with any strategy. I did the same thing here. Here's a mind-boggling thing. If you're a newer trader, I want you to listen to this. I did the exact same approach during this period of time that I did during this period of time. And that right there is why trading is hard. Because you can do all the right things and experience loss before you experience gain. So anyways, I thought that was kind of a cool lesson of the day. Just remember, no strategy is perfect. Everything has drawdowns. Now, that doesn't excuse you from backtesting. If you've never backtested before, you will not make it as a trader, just guaranteed. You have to backtest. You have to understand what you're doing will actually produce a profit over a long stretch of time, right? Otherwise, I would have quit somewhere in here or quit somewhere in here, right? I had to know that overall my trading was going to do fine based on the back testing. Now, of course, back testing isn't a guarantee, but what better thing than testing your trading style against historical data? There's not much of a better way, in my opinion. So with that said, guys, that's going to wrap up the weekly video. If you did enjoy, make sure to hit the thumbs up button if that was helpful to you in any way, shape, or form. And remember, the links down below for the VIP group or the Edge Finder will be down there, and there's a promo code for you to get a discount. Thanks for watching, guys. Have a great week ahead.